All right, we are live. Welcome back to the channel. This is the second live stream that I'm doing. We're trying to do this every week, either on Tuesday or Wednesday. Today it'll be on Tuesday. I think I like Tuesday a little bit better, but we'll see how it goes. Anyway, today we'll be covering the general market indexes, SPY, QQQ, like on the screen, IWO, and ARKK. We'll break down how the leaders are acting in this market. The market continues to sell off, so we're looking for any types of relative strength, any stocks that are holding their 8-day or 21 EMA as the markets pull in. And then from there, after we go through a quick look with the leaders, we'll go through the 8 or 10 stocks that I have just on my watch list going into the second half of this week. Now, just because they're on the watch list doesn't mean that I'm going to be taking all of these trades, even if they all trigger the buy points that I'm looking at. What I want to be doing here is keeping track of stocks that are holding up well during this market, showing relative strength, creating some buy points, and then if the market bounces and we see these stocks go through the buy point and then continue forward, so break out and hold that action, that builds a little bit more credibility in the market and builds more confidence that I have that the next breakout setup is going to work. So then I'll start to dip my toe back into the market. If we see the stocks go through the buy points that we covered today and immediately reverse and market leaders continue to fall apart along with the indexes, well, then we don't want to have any exposure in this market. And right now, my trading account is 100% cash. My long-term accounts my retirement accounts that I'm actively managing are short Bitcoin and short ARKK right now, but not a very large amount either. So I want to go through and get a sense of where we are in the market, where we are in the sell-off. Just like we don't want to be buying stocks that are too extended to the upside, we also don't want to be buying any stock, or we don't want to be selling short stocks, any stocks that are already extended to the downside while the market's extended to the downside as well. After those 10 stocks, we'll be covering any stocks that you guys want to see. So if you have any chart requests, drop them in the comments. I have those up right to the right of my screen so I can see exactly what you're saying. Charlie's coming in with the birthday celebration hat there. That's awesome. So if you have any trading questions along the way, anything that I'm saying doesn't make sense to you, drop it in the chat, and then I can clarify that. That's the beauty of these live streams. And then if you want to see any charts, any chart requests, drop those in the comments as well, and we'll get to as many as we can in an hour or so. That is the agenda for today. This live stream is sponsored by MarketSmith, which is the trading research platform that you see right here that we're going to be using to break down each of the stocks and indexes. So if you'd like, after we go through all the stocks and you're like, wow, this platform is great, it has a lot of information, and you want to give it a try yourself, there's a link in the description below so you guys can try it out. I think the deal is 3 weeks for $20. And finally, I am starting to put together a new series for this channel. I haven't figured out a name for it yet, so if you have a great name, leave it in the comments as well. But it's going to be basically a one-on-one trading audit. So think like Dave Ramsey brings someone in, they talk about their own personal finances, and he gives them tips and stuff like that. But we haven't seen that with trading. So I know Charlie's in the comments. He's already emailed me. He's going to be one of the people in the series, which I'm really excited for. So we'll break down kind of your journey as a trader, where you think you have room for improvement, and then also look back at your past month of trades so I can give you feedback there. So if you're interested in doing that, you can email me at stocktrickswithnick@gmail.com. That's also in the description. And we'll get in touch and go from there. All right. Enough of an intro. Let's go to the charts. Looking at QQQ right here. Let me expand that. All right, so we never got to the 200-day simple moving average like we did in, what was this, March's rally. March 29th, we kind of peaked there and then rolled down very quickly through all the moving averages, and then we eventually settled in on a low June 16th. From there, we had a nice rally. I think this was 3 or 4 weeks up. Didn't quite get to the 200-day simple moving average, but I guess that didn't matter. SPY did get to the 200-day. We'll go to that chart in a second here. But last couple weeks, we had this gap down under the 8, the 21 EMAs. Kind of had one day on Thursday last week where we popped up. And after this day, after we popped up, it's a very strong close, up 1.8% that day, closing right at the high. I found so many setups in the market. Semiconductors started working. We had ACLS breakout, PLAB broke to the upside, and I really wanted to get aggressive on Friday just because I saw so many setups. I saw another group kind of getting into the mix of groups leading the way up. And then we had that Powell speech on Friday where he said there is going to be pain. They're going to be fighting inflation with everything they have. And the market heard him loud and clear. And we saw a, 4.1% sell-off on QQQs, breaking back under the 8, the 21 EMAs, closing at the low of the day. And then with the 2 trading days we've had this week, we had another gap down on Monday, closing, 29% in the daily range, so a lower close yesterday. And then today, down another 1.1%, this closing range and 31%, so also lower in the daily range. That's usually not a great sign for the market. I really expected after what we had on Friday, some type of oversold bounce or rally attempt on Monday, but we did not get that. Today, we closed under the 50-day simple moving average for the first time since July 19th. Not a great sign for the market, and we're selling off, not on above average volume, now that Friday was above average volume, but still elevated compared to some of the last couple of weeks. So definitely a lower probability market to be trading in because we have the Fed against us and we're under all the moving averages. And all the moving averages are also in downtrends except for that 50-day simple moving average, which we just broke below. But the 200-day is in a downtrend and the 8 and 21 also in downtrends. SPY, pretty similar story, so don't want to spend too much time on here. But this did get to the 200-day simple moving average when we rallied. And then similar action last Friday, down 3.4%, not 4.1, but you kind of expect that. Energy held up a little bit better on that Friday, and that makes up the larger portion of SPY versus QQQ. Monday, another gap down 0.6%. Today, down 1.1%. Also closing under the 50-day simple moving average. Also, this is actually above average volume because energy stocks, XLE, were down, 3.4% today on just about average volume. So what held up well on Friday, which kind of gave a slight edge to SPY versus QQQ, started to give up today, which is not great. Next, I want to go to IWO. This is the growth ETF, the Russell's 2000. This is holding up a little bit better. We were down 1.4 or 1.5% today. Also selling off on just right at average volume there. Above the 50-day simple moving average, so a little bit better than the others, but still nothing to write home about. This doesn't make me super excited because the price is still under the 8, the 21, and the 200-day simple moving average, and all those moving averages are in a decline. Final ETF we're going to talk about before we go to a look at the leaders is ARKK, and this is one of the ETFs that I am short for full disclosure. We had this actually didn't really rally very strong compared to the indexes. I think that was mostly because Apple was holding up so well. I think Apple almost got back to their previous highs before rolling. Yeah, 176, 182 was their highs. That frozen rope eventually snapped down, which we tend to see when you have that very tight uptrend with no shakeouts. When it does break, it breaks pretty quickly. So because ARKK doesn't have Apple as their main stock in their portfolio, it didn't rally nearly as much. We never even got to the 200-day simple moving average, but then we broke down under the 50-day simple moving average, had a low volume. You see these two blue candles here, or blue rectangles, whatever. Low volume rally back up to the 50-day, and then we got rejected again on that. So closing, what was this? Closing in the bottom third of the price range today. I see it's up a little bit after hours, but I mean, not too much. So ETFs-wise, not much to write home about, not much to get very excited about. I did want to bring over this one chart here. I don't know if you could see this super well. No. Let me switch here. So this is tracking the net new highs and net new lows. I posted this on Twitter, and it just shows you that we had more new lows than new highs yesterday and today as well. So a lot of things kind of working against us in this environment. Next, let's look at the leaders. So I have a group of about 12 stocks that I'm deeming like potential new market leaders. And I keep track of that, not saying that these are going to be the leaders, but just what's leading at this point. And I want to see kind of decoupling action between the leaders and the indexes, right? If we want to outperform the market, we need to be buying and owning stocks that are outperforming the indexes. That's the only way to do it. And one of those stocks, PLAB, was in that list. I have to take it out after today because they reported earnings, 132% earnings per share growth, 29% sales growth, 14% after-tax profit margins improving, and the stock plummeted 23.5%. Earnings up 132, sales up 29, after-tax profit margins up 14, stocks down 23.5. Now you'll see this, and you'll see a lot of people on Twitter say they had great earnings. This is an overreaction. This is a great buy, like right at the open. This is going to be a great buy. The stock's on sale. No, absolutely not. When we had that breakout on PLAB, this is a semiconductor stock. Same with ACLS on the same day, last Wednesday, I believe it was, or last Thursday? Wednesday. Last Wednesday. That immediately reversed. So it was up, 8.6%. We reversed down 12% the next day on above average volume, more volume than the breakout, huge red flag. And then going into earnings, you don't have a profit cushion unless you bought, I guess, at the previous earnings breakout. Pretty volatile action to hold through all this, but maybe you did have a position in that, and then that's unfortunate. Like you hold a position with profit in earnings, or at least a piece of that, and you got hit on this. But what you shouldn't be doing is saying they had great earnings. This is an overreaction while the market's below downtrending 8 and 21 EMAs. We're in a very tough market, right? I don't want to paint this picture as anything else. This is a tough market. And when a stock breaks down 24%, and really, I mean, this opened right around 19. I don't know if the open was exactly 19, exactly the high of the day, but it basically opened and just sold off hard. And that's institutions leaving their positions. It's not me and you, the retail traders, just, okay, it dropped, so we're getting out. No. This breakout was used for liquidity to sell off into. We got that the next day. We saw that. Heavier than average volume, heavier volume than the breakout. Institutions liquidating before earnings, down to the 50-day, and then even worse, closing right near the low of the day, 8% closing range today, down 24% on, 780% of the average volume. That's not a great look for the leaders, and you also see it spill over for AEHR, also a semiconductor stock, also a potential leader on my leaderboard. And this had started to show signs of weakness last week, where it made a new high on the 24th, but then reversed and closed down 8.6%. Now, with ACLS, with PLAB and ON breaking out on that Wednesday, this also rallied up 8.8%, but on less volume than the sell-off did. And then we do eventually get 3 days, boom, 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 down, 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 breaking through the 8, the 21, and also 15, which is a nice round number, also kind of a previous resistance area. When you break over that, it's potential support. And it just cut through that like butter. So that's another leader that's not acting well. I'm just going to go in order, so not all harping on the leaders and then all good things. But next is CELH. This is Celsius, the energy drink. And this is holding up relatively well. I didn't like how quickly it just gave up the 8-day EMA. And then yesterday, when many stocks were okay, down 1-2%, this was down 5.2%, which wasn't great. And then today we pull back to the 21 EMA. That does catch a bid at that again. And we close only down 0.5% today and in the upper half of the daily range. So this is one of the leaders that, even though it's not, you don't point to this and say okay, it's time to get aggressive in the market, but you point to this, say, okay, the 21 got supported, it got supported here, got supported here. There's people still building positions into this 21 EMA. If this breaks and 100 breaks on above average volume and we close below both of those, that's a huge, huge red flag for this setup and also the market. Next, we have CLFD. This is in telecom, fiber optics, fifth strongest group in the market. So 99 earnings per share rating, A+ group strength, A+ accumulation distribution. This is really what it takes to get on the leaderboard that I'm looking at. And we had over 100% rally from this nice base here. And now we're under the 8-day EMA, but we're still above the 21, haven't even tested it. So for this, I mean, I don't see a clear entry point on this name just yet, but it's also not a leader that's failing. So that's better than what we've had so far. That was CLFD. Enphase, solar stocks showed relative strength today. This was up 1/3%. I think it was up like 3.5% at one point, up to 296.82 was the high. So try to rally today, and with that market breadth getting worse and worse throughout the rest of the day, it just kind of dragged it down. I did like that it closed back over the 21 EMA. This is one that has been punching that 21 and then closing above. So really that's the characteristic of this stock. Now what would be a changing characteristic is if we close under the 21 EMA. We haven't had that yet with the MPH. A close under, that's the warning flag for this stock. But this one's holding up relatively well. Want to kind of keep this on a more focused watch list. First Solar, another solar stock. This actually made an all-time high today. I think they announced that they were building another factory in the US. I don't really keep track of the news with the stocks. If it's an important bit of news, it's going to be reflected in both price and volume. So that's really where I get my news, is the chart. Otherwise, there's so much noise in what does a new factory mean for the stock, all this stuff. So I tune that out. All I see is this stock, relative strength rating 98, making a new high today while the market continues to sell off above all the key moving averages. And it's still in that solar group. Solar is the number one group in the market out of 197. So that's a great thing to focus on. LNTH, a little bit quicker on this, broke under the 8, the 21 EMAs, closing near the low of the day today. This one has always been a really tough stock to trade. Now it did have this nice HVC breakout. What was this? 1100% breakout here. This was really like your only clean trade throughout this whole rally here, which is really annoying. There's a couple like downtrend lines you could draw and buy here, but you do get shaken out if you use a 3% stop. I was watching it in this area, but really frustrating stock to trade. It's just a leader because it shows so much relative strength, has great earnings. I mean, it definitely deserves its spot. It's just been a really tough stock to get into and hold. But this now under the 8 and the 21, starting to look a little shaky there. ON Semiconductors, similar to ACLS, broke out on Wednesday of last week. Am I getting this day right? Tuesday, Friday, Thursday, Wednesday. Yeah, I am. So broke out into all-time highs on Wednesday. Great sign. Can't be too bearish when you're breaking into new all-time highs. Closed at the high of the day as well there. But similar to PLAB and ACLS, had immediate reversals on above the volume of the previous day. Big yellow flag or red flag, whatever you want, to at least take some profit or take something off the table because you actually closed below that entry point. We break under 70 on Monday. We break under the 21 EMA today, but close above it. Out of all the semiconductor stocks, outside of GFS that we're going to cover in the watch list portion, this is one that's holding up the best. Like AEHR is under the 21 EMA now. PLAB is not going to be a market leader, at least for the time being. So we want to keep a watch on ON. This potentially will be the market leader in the semiconductor sector. PRVA had a nice breakout last Thursday. Actually held that, or what was this? Was this Tuesday or something? The 22nd. Broke out on an above average volume of 15%. Nice inside candle the next day. Pushed even higher on the 24th. And then eventually this Friday we rolled. I actually started a position right at $40, like $40.14 on this day. It bounced up a little bit, sold a third into strength just to keep my risk low, and then got stopped out for a break-even trade as it came back under $40. So I don't know, didn't lose any money, or I lost, sorry, want to be transparent here. I lost $3.47 on the trade. From there, pulled back under the 8-day, pulled under the 21, closed under the 21 EMA today as well. So we'll see. This is another stock, another potential leader that's not super strong. RYTM, I posted this on Twitter a couple days ago, or yesterday. This broke over the previous high here, also broke over $25 and the previous pivot here, and then immediately reversed. When you're in a very tough trading environment like we're in right now, if you get a stock set up and you actually, if you see a stock set up, like a breakout type setup, and it goes over that pivot and then immediately reverses lower. So if you buy the breakout of the pivot and you're immediately at a loss, in this market environment and you're trading on the long side, you're already stacking probability against you by trading against the market, the downtrend, by trading against the Fed. If you trade a breakout type setup where you're moving over a pivot and then you immediately start to lose money on that trade, just cut it, because it went to 20, I think it was 25.17, 25.37 was the high, 25.27 was the high of the pivot, and it really just clipped that, got that extra liquidity, and people started dumping, down 8.2% under the 8-day, still at the 21. So like this could form up better in a couple of weeks, and then we could trade it. But this reversal is nasty. And from plus 4% to down 8%, you're down 13% if you didn't immediately sell and have a stop loss there. So this chart's not broken, but it's starting to wane a little bit. SWAV still holding up relatively well under the 8-day EMA. Made a new high yesterday while the market was down, which was great to see. But it also broke under $300. Typically, like we had the 8-day EMA right there at $300. 300 is a nice round number. If there's an institutional bid in the market, there's going to be liquidity to support those round numbers, support the 8-day EMA, and we didn't see it. Like even though this showed relative strength, it was up 1.9%. The low of the day was 298. So that $300 area wasn't supported, and that just shows you like there's not much liquidity in the market right now. So even though this is showing relative strength, it's probably not the time to buy a move into new highs there. Today, down 4.8%. I mean, above average volume. Not great, right? But we're still above the 21 EMA. Let's give this a little bit of time to set up. Another stock that's been pretty tough to get into, even though it's been holding up relatively well, or really well. TH, this had a false breakout on Friday. Was holding up for as long as it could and then eventually dumped. I think down 3.9%, 3.8% that day. And now broke under the 8-day, broke under the 21, down 7.5% today. This is another leader that we're pulling back on lower than average volume, but you're not buying this like anywhere in here with no setup, with no contraction, with no sign of buying support at any of these numbers. So at least at this point, this leader is not acting super well. And then finally, last leader that we'll cover is TMDX. This one is holding up pretty well. Made a new high today, so you can't be too bearish there. But again, this had like a 4-day pivot. It went over and then immediately reversed as the market gapped up today and then sold off throughout the day. Didn't hold the $50 area. 49.64 was the low. Didn't hold the 8-day EMA. We did close over that, but it just shows you, again, liquidity is not in the market right now. So if you're trading on the long side, you're not going to have as high probability as you'd like. So for me, as a swing trader, I want to be either in cash or short during these times of low liquidity. But I'm not shorting these leaders. I'm shorting the weakest stocks in the market. We always want to buy the strongest stocks, short the weakest stocks, and kind of keep track of what the leaders are doing. So still above the 8-day, closing above that today. Not doing anything terribly wrong. If you go to a weekly chart, if we just consolidate like around 40, call it like 47 to 52, that would be ideal. And then eventually when we find our footing in the market, maybe this has another push higher. But so of the 12 leaders we covered, or we covered 13 because I'm switching out PLAB for First Solar FSLR. There's a good amount of damage, a good amount starting to break under the 21 EMA. We got to be pretty cautious there. Okay, let me check the comments really quick, and then we'll cover the 10 stocks that I am having on a watch list as potential longs, very potential. So if you guys have any charts that you want to see me break down, especially using everything that MarketSmith has to offer, including we can look at the number of funds invested in the stock, where the stock ranks within the group of, so like TMDX, very weak group, 124 out of 197. But within the group of 141 stocks, this is relative strength number 1, accumulation distribution number 6, composite rating, overall rating number 8. So all that cool stuff that we could use MarketSmith for if you have a chart that you want to check out. All right, let me read these comments. IWM still above the 50-day? Yeah. Charlie, I like to use IWO. This is a trick that I picked up from Leif Sereda when I traded with his program, is IWM has a pretty large number of stocks that's not like the typical heavy growth names. So if you're more of a growth trader, more of a breakout trader, I like to use IWO a little bit more to kind of gauge that risk appetite in the growth names, in the smaller cap names. So, okay, I don't see any just general trading questions. Keep the stock chart requests going. We'll get to as many as we can. We still got 34 minutes. And I don't have a ton to say about all these setups, but we'll get to the setups that I'm watching for the second half of the week. Let me get... Whoo! All right, ALDX is the first one. They moved biotechs up. Biotech was the 5th strongest group in the market this weekend. Now it's up to number 2. This stock has an A+ accumulation distribution rating, meaning many of the heavy volume days come on up days in the market versus down days coming on lower volume. And that's exactly what we want to see, right? We want to see heavy volume coming in, pushing the stock up because there's a lack of sellers. So heavy volume will rapidly increase the price of the stock. And then we really want to see just short-term traders, maybe day traders, swing traders taking partial profits. And that's where you get those lower volume pullbacks that get supported at either key moving averages or whole numbers if the stock has a bid on it. So ALDX, accumulation distribution, A rating there. Because it's a biotech, they never have very strong composite ratings because there's no earnings or sales to really talk about. This is very much a technical trade only. And if you don't trade biotechs, that's not your thing. I'm not pushing you to trade any of this, but just showing you what's holding up best in the market in a very tough market. So you can see this chart. We had a really nice move. I mean, from $2.35 up to $8. That's massive. I can't do that percentage right now. I have a calculator next to me, but I'm not going to. We eventually, and see all these heavy volume spikes here, all blue candles, meaning they came on up days. From there, we pulled back to the 8-day EMA, kind of bounced around, shook under it. But we've had 4 days slightly declining, but all on very, very light volume, showing that it's not big institutions getting out of the stock. Otherwise, I mean, this is traded 1 million shares a day. So if a big institution is trying to liquidate a position, you'd see it on the chart very, very cleanly. But with this, I'm just looking for a break over today's high, 723, 725. Just a break over this downtrend line as a potential entry point. With biotechs and in this market, I'm not trying to hit any home runs. I'm not trying to be a hero trader with the indexes under their 21 and their 21 and 8-day EMAs. I'm not playing hero ball or hero trading. If I do take a trade, it's going to be like a 5% position size, 10% position size, and I'm going to try to get the stock working immediately. Otherwise, I'm out of the trade time-wise. Like if it goes over my buy point and other people aren't pouring into the stock, I'm not playing around in this market. And also, if it does work immediately and starts to break out, I'm also scaling out very quickly too. Again, I'm going for singles and doubles right now, not the time to swing for home runs. So ALDX, you can see the setup, really nice flag out here, lower volume in the pullback, doing all the things that you look for. Fund ownership did decline in June. I guess, yeah, so June was over here. Since then, we've had massive volume come into the name in July and August, so that probably spiked up a little bit. That's ALDX. Another biotech stock, ALT. A lot of these are biotechs because that's what's been holding up the best, and that's why it's reflected in MarketSmith's number 2 ranking. This had a nice move up, 353% of the daily volume, up 26% on this day. and we're just really riding this 8-day EMA higher. I don't like that there hasn't been a shakeout to really like loosen up the weaker hands in the name. And when I say weaker hands, like I'm going to be one of the weakest hands in the market because I'm using a stop loss of 3%, 5% max on any of my positions. Again, in this market, I want to be right away or out in preserving my capital. And this is one that I'd rather buy something lower in a base, like lower closer to the moving averages than buying up here. So I'm kind of using this as a risk gauge for both the market and for biotech stocks. Like tomorrow, if market pressure relieves on the indexes and we see a bid in the market and this breaks through 1970, breaks over $20 and actually holds that move, okay, then I mark that down. This was a potential setup that worked. Now maybe I can get a little bit more aggressive in the market or start to dip my toe in the market. But I'm not buying anything at a brand new high, just a setup that's showing relative strength in the right type of group that we can use as a risk gauge. Next, we go to a solar name, ARRY. So we saw First Solar make a new high today. We saw ENPH drop down under the 21 EMA but close above it. It was up 3.5% at one point today. So within that same group, but maybe a little bit cleaner of a setup is ARRY. This is an A- accumulation distribution, 90 overall composite, earnings up 350, sales up 116 year over year for the last quarter. Within the stock or within the group of 22 stocks, this is 6th overall composite rating, and then number 1 on relative strength rating. And we do see fund ownership kind of staying at this 409, 410 mark until June. But again, this was back in June. Since then, we've had a couple heavy volume up days as we ran from $12 all the way up to $24 for a double there. So this pulled back to the 21 EMA, found support there. I really wish it found support at $20 and that area held. But I mean, what I wish doesn't happen in the market. I can't control the market. I'm just trying to interpret the action, right? So that breaks under 20, bounces at the 21 EMA. That's good. That's better than nothing. We rally up and we still get really wide daily bars, which makes it tough as a swing trader to get any size on your trades. But looking for a break over today's high, 22.87, or maybe if we go to like 15-minute candles, there might be an intraday. There's really not. Yeah, if the market tanks and this like pulls into 20, then that's an area that I want to watch. But I'm probably not putting a ton of exposure on if the market's tanking anyway. But this is another stock in that group, that solar group, number 1 in the market. Let's keep an eye on this. Just set some alerts. You don't have to buy the stock, but if you set enough alerts on quality setups and they're all breaking to the upside, and you go through those charts and they're all holding their breakouts, that's a good sign for the market. It's at least a step in the right direction. Next, we covered CELH, but also I want to see this 21 EMA hold. I want to see $100 hold. If we can, maybe not tomorrow, but later on in the week, get back over the 8-day EMA, potential entry point around there. This is just one of the leaders that I had traded and made some money off of, so probably a little biased on my end trying to get this long, but it's a leader that's above the 21 EMA. We want to keep it on a watch list. Charlie, I think you mentioned this in the comments, CALM, one of the few holding up. Yeah, so this was on my watch list as well. Really nice cup, handle, shakeout, and now we're really starting to see price tighten. This is in food meat products, so not usually like the fastest moving group, but right now and with inflation, maybe it's a group that we should be focusing on. So 79th strongest group out of 197, B group strength rating, B- accumulation distribution, 96 overall composite rating with a 96 individual relative strength rating. Whenever we have both the composite ratings in the 90s and the relative strength ratings in the 90s, that's a stock that we should have on, and the stocks, well, yeah, so 90 relative strength, 90 composite rating. That stock should be in our world of potential setups. It doesn't mean it's ready to be bought by any means, but just in our world that we know of. And as long as volume's above whatever your requirements is for liquidity. But yeah, with this, had a nice shakeout recently. Again, try to get going on Friday. I think, what was this down? Only down 0.5% on Friday. It was actually up yesterday, down a little bit today, holding that 21 EMA. But Probably not one that I'm going to buy. Just looking for a break over Friday's high, like 20 or 55, 51. If that can get working and I can use this as a risk gauge, that'd be great. So I'm halfway through my list. I don't want to do this all the time, but if you guys haven't liked the video yet, please do me a huge favor and just click that like button. It takes 1 second. It's free, and it helps YouTube push this out to other traders that are looking to do the same things that we're doing. And also make sure you subscribe to the channel. I'm going to be doing these live streams every week, along with a breakout watch list on Sunday and a trading audit, hopefully once a week. Once I start getting it going, I got to get back to Charlie and set up our interview with that. But make sure you're subscribed, leave a like, and we'll keep crushing some charts. CPRX, this is another potential leader, also in the biotech space. It's above the 21 EMA. It's starting to tighten up a little bit. If we go to the 15-minute candles, we're putting in higher lows, higher lows, higher lows. And we have this very short-term pivot right around $14. Again, that's more of a risk gauge. You could also use the break over today's high, 14.24, as a potential entry point. But again, I would rather trade a stock that actually has gone through more of a base at this point and then has exhausted some sellers. With this stock, it went from 6 all the way up to 15. No sellers are exhausted, sellers are exhausted at any point. Buyers are very strong still. So it could work with market pressure relieving, but it's still really high up in that area. GFS is the other semiconductor stock I wanted to talk about today because it was up 3.5% today, while all the other semiconductors really took a beating. Well, at least all the other leading stocks. NVIDIA was down to AMD down 1.7, whatever. So GFS, we don't want to be focusing on the laggards, the old leaders like AMD and NVIDIA. That's not how we're going to outperform the market. But with this, we pulled in the 21 EMA. That area got supported. We broke back over $60, closed back over the 8-day EMA. So with this, just looking for a break over today's high, or if we get a little bit of weakness in the market and we come back to 60, potentially starting a position around 60 using that 21 EMA as your stop loss. That's less than a 5% stop. Again, you're not putting a full-size position or anything like that in the market. We're not trying to hit home runs here. All right, GFS. Then RXDX, as you can guess it, another biotech. Pretty shaky pattern, just one that's holding up relatively well, has a round number right around it, and the 8-day EMA. I honestly wouldn't mind if this kind of pulled back to 45, built out a handle, because we see this giant cup. But another one that I think this, kind of tightened up on a lower time frame here. So 50-50 potential entry, 51 potential entry. But again, I'm saying potential in very, very loose quotes here. I don't plan on getting aggressive at all tomorrow. ORA, I haven't seen anyone else talk about this stock on Twitter. This is one that my dad doesn't know anything about the stock market, and I forget how he found this stock, but he was like, oh, geothermal is going to be the energy source of the future. And this was 5 years ago when I just started trading stocks. And sure enough, this has come back on my watch list. I don't think it has done much since 2015, 2016, up a little bit. But if you're watching this, Dad, it's back on the watch list. But had to move 67 up to 98, pulling back to the 21 EMA. That is held. Tried to get going Friday, squatted a little bit. Really starting to tighten up. Ideally, a couple more days or even a week where this 21 EMA catches up to the 8-day and that goes flat. I think that would be the best entry later on. But energy alternatives, the fourth strongest group in the market out of 197. This has B accumulation distribution, 88 composite, 95 relative strength. Doesn't have the earnings right now. Sales are slightly improving there, but fund ownership is improving as well. Last stock that I have, and then we're going to go through as many as we can of yours, and we got 21 minutes, so I'm sure we're going to be able to hit all of them, is STEM. This is in computer software enterprises, so weak group, 131 out of 197. Does have an A+ accumulation distribution. You can see those nice blue bars on up days, lower volume pullback days. That's the type of pattern that we're looking for. And then we had to move from $6 all the way to $17, right? So if we look to the left of the chart, it would be this way. If we look to the left of the chart, we see overhead resistance right where we ran into it at $17, which makes sense for a place to pause and rest. And then we pulled back to the 21 EMA, bounced there, and now we're starting to see some tightening action as well. On the 15-minute chart, there's not like a very, very clean pattern as well. So we're really looking just like a break over a previous day's high on this. So what would that be? 1563, 1571, right around there as a potential entry point. But again, I would be much rather taking I'd much rather take breakouts in like a flag versus a breakout into an all-time high at this point with the market looking for liquidity to sell off into. And that's another thing that I learned from Leif, really. When something goes really bad in the market and you see the index is flush and a bunch of growth stocks get hit really hard and everyone's taking losses, the first couple breakout type setups usually get sold off into very, very quickly because people are taking from their winners, they're selling their winners to pay for their losers in the market. And, breakout traders are thinking kind of the same way, as like, we want to just get something going, set our stop loss at even as quickly as possible, and then really just like flip into the strength. And then you also have like more longer term traders typically that just took a beating on some stocks that they're looking to offset some of their losses. So the first couple of stocks that break out after a really sharp decline usually get sold into. So you'll see a breakout and a squat, and maybe later on in the week or something like that, it'll set up again. But just know, I can't tell you what everyone else is going to be doing. If I'm trading anything on the long side this week, it's going to be I buy the breakout, I sell immediately at least a large portion, 1/3, 50% of it into the initial move, and then move my stop loss to even as quickly as possible. I don't want to lose any money in this market if I'm going to be trading at all. So those are all the stocks that I had on my watch list. Let's get going on your guys's. CIA, continuous improvement audits. Insurance life. I used to work in the insurance business. Insurance life, 82 out of 197. Insurance just doesn't move very fast. And if it does, it's probably not a lower risk like market or lower risk company. Stocks under $5, liquidities under 250,000 shares traded a day. So if a big player does try to get out of this name, it's going to hurt the stock immensely and very quickly. So you might get slippage on your exits. So when that's stacked against you, like really liquidity, it doesn't meet a 250,000 share threshold. That's like on the low end for the stocks that I want to trade. It's also under a declining 200-day moving average, under the 50-day moving average today, and the 21 and the 8. And usually the insurance business isn't an area where I want to be like swing trading for stocks that are going to appreciate very quickly in value and allow me to outperform the market. So while this might be a great long-term hold, I have no idea. Citizens Inc. Whole life insurance. Okay, I was on the property and casualty side, not life insurance, but probably not a stock that I'm looking to swing trade there, Don. FCX. Freeport Mining, so metals and ores, 181 out of 197. We're below declining 200-day simple moving average. The volume, daily volume is 20 million. That's more than enough. But we got the sell-off down to the 50-day simple moving average. We broke under around number 30. We did close right on the 50-day, but outside of an oversold bounce here, which I don't like to trade myself because, I don't know, I'm terrible at buying the oversold bounces and stuff like that. So I don't see a high quality setup here. We're in a weak group under key moving averages, selling off through round numbers, closing right near the low of the day. Relative strength rating is a 20 on this. Accumulation distribution C, and nothing really working in the group. So not a stock that I would be looking for. I mean, does that mean that it can't just rip higher and go from 30 to 60? No, it can absolutely do that. There's no one on Twitter, on YouTube that's going to tell you exactly what a stock's capable of, because stocks are capable of anything. We're just looking for high probability trades that we can manage our risk very actively with. And I don't see a reason to get super aggressive here unless you're buying kind of an oversold bounce, but even that is pretty challenging, at least for me. ABT looks like a similar story under all the moving averages. 62 out of 197 is a little bit stronger. That's a B plus group strength rating. 75 composite, 34 individual relative strength rating. Just think about it. Like, we have 10,000 stocks to choose from, right? And I'm not harping on you. This was Jack, right? Jack, I'm glad you're bringing these stocks up. This is great. Keep it up. But out of 10,000 stocks in the market, what stocks are demanding that we put capital at risk in the market for those stocks? Is it stocks that aren't in the strongest group, are under key moving averages that people are selling? Or is it the stocks that even during this bear market that we're having are holding key moving averages, are holding round numbers, are in a strong group, are seeing accumulation with volume? Really, like, what are the A plus setups that we're gonna risk our money in while the index is doing this? Because as the index does this isn't a high probability trading environment. No matter what trade we take, it's not a high probability trade. Now, if we get back over the 8, the 21, we start going again, you see market breadth improve, then we can start taking more of the B plus, B minus setups. But I mean, even then I would want to focus on A plus. But yeah, this one, ABT, it was green today, but not really setting up to anything that I would want to risk my capital on. A B with Don. All right, finance investment, 56 out of 197 for group, B plus group strength rating, B minus accumulation distribution, 76 composite rating, 67 relative strength. I really want stocks at least in the 80s for relative strength unless it's an IPO. Under a declining 200-day simple moving average, but I see what you're looking at here. That the breakout buy would have been like in July here, moving up. I would rather be late on this and it breaks over the 200-day simple moving average and like really gets going, and then it sets up a little bit later on, probably while the market's better. Anything under a 200-day moving average, especially a declining 200-day, and I'm going to miss it. That doesn't mean you have to. You could absolutely do whatever you want. I have just noticed that the best quality setups are usually above the 200-day. So my 2 cents, not financial advice. Calm, C-A-L-M, we talked about. Oh, CIA was the new. Sorry, Don. All right, Charlie Short, CPX. Nice. Oh, no, he's joking. Okay. Chickens, eggs, fertilizers. Yeah, fertilizers caught a bid early this week, or last week and early this week. MOS rallied, from 54 to 62. What are some other ones? IPI, I think, is one. Rallied right into that 200-day simple moving average, a declining or flat 200-day, and then rejected there. So I did get the memo as it was rallying. Same with like steel companies. STLD, that was another one that caught a bid and then reversed lower. X is a steel company, caught a bid, 200-day, reversed lower. So just not seeing much going on there. All right. ELF, yes, this has been on my watch list as well. I think it's a makeup company. I saw my girlfriend had like eyeliner or something with it, Elf Beauty. So personal care, 111 out of 197, C plus group strength rating, A plus accumulation distribution, 96 composite, very strong, 97 relative strength. So it's in our wheelhouse because it has average daily volume over 400,000. So we want to have it at least in the world of stocks that we are watching. And man, I think this is making all-time highs. Let me go to the month. Yeah, even on the monthly, all-time highs. So hard to be bearish at this point on this stock. Did have a quick check back to the 21 EMA, undercut that, but nice move today. I've been passing on this just because it's also not a stock that's going to like rip your face off with a rally. And if I'm going to be putting money into the market, I want something that's going to break out pretty quickly so I can sell into that strength really quickly. And a 2% move isn't really worth the kind of time and effort at this point in the market. But I really like what this is doing. I mean, within the group, 37 stocks, it's number 1 composite rating, number 3 relative strength, number 2 accumulation distribution. Really strong move today. Just not like a super clean setup on the daily chart. not super clean on like 15-minute, and you got some overhead supply at 38. But I mean, have it in your world, and if you're willing to trade something that moves a little bit slower, then this is a nice one to look at. Okay, let me go through the rest of the comments here, and keep them coming. We got 10 minutes, so power 10 minutes to go. Thanks so far. Thanks for showing up, Sharon. I appreciate it. JAKK. Leisure, toys, and gaming. Okay. 118 out of 197. A accumulation distribution rating. 96 composite, 99 relative strength. Average daily volume at 205, a little bit thin for me. I probably won't be trading this, but I like in general where it's at. Let me check a weekly chart and a monthly. So it's got a lot of overhead on a monthly. Got some overhead right where we're at right now. And after rallying a bit and given the market conditions, I would rather be a little bit late to this party and where it rallies back over this area. But also, it's a thinner traded stock. So like if someone needs to get out of this, they're gonna hit the market sell order and just it's gonna go quickly. So you gotta be careful with your sizing when you're trading a thinner traded stock. Little advice there. But I mean, holding up well over there, a rising 21 EMA, making new highs for the year. So good. Nerve, N-E-R-V. Biotech, 5 billion shares traded a day, went quickly from $2.50 all the way up to 10. Let me write this one down because I don't think I've had this on a watch list before. Develops pharmaceuticals to treat patients suffering from central nervous systems. A+ group strength rating, A accumulation distribution, don't care about composite ratings, relative strength 99. Let me check into like the 15-minute because, I mean, this looks extended a little bit in the short term, but these volume bars are massive on up days. And also let's check short interest. Short interest is 0 days, minus 86%, okay. Let me check the 15-minute candles. So, yeah, these like smaller ones that get going, like this was a pop, but it wasn't over $5 really, so it didn't get on my radar. And then, I don't know, that's hard to trade. You're not going to be holding a bunch overnight on something that you don't have a large profit on, which means like you had to get in over here at. This would have been a nice entry, but like 660, and then it shakes out under 636. 6% stop on a trade like that, that's a little risky as well. But it does pay off. I mean, gets going again. So even though this has been like ripping, it's pretty hard to find a lower risk entry point on this name. It didn't respect $10, so if it really had a true bid, you would think that $10 would be supported. But I mean, it came into the previous supply area, got bid up there. Yeah, I mean, I'm gonna put this on my like the world of stocks that I'm watching, set some alerts, but unless like something like this where it's like a high volume, very quick mover, unless it sets up like perfectly on a lower time frame and I can just like in and out, something like that, it's going to be tough to be worth the risk. Because like if you hold this overnight, like this is down 5% overnight. That they're very risky, and in this market, I'd rather just be safe than sorry. All right, the stock NICK, Don. Let's see what Nick is doing. No, I'm just kidding. I know you said the CIA joke. Nick Financial. Man, look at this mess. I'd rather be subscribed to the YouTube channel than own this stock. All right, ROCC. Oil and gas. So energy got hit pretty hard today. We already kind of covered that, but this came back from 40 down to the 21 EMA. Good earnings, relatively strong group. So unless you're buying right on the 21 EMA and the previous pivot area and using like a 3% stop, something like that, I don't see a super clean entry point. I'd rather try and buy the leader, like OXY, as it comes back into $70 than try to buy like a lagging stock. Or that's not what you said. You said ROCC. But PTEN was a stock that I had traded. That's why it caught my attention. But let's see if this 21 EMA holds up. Let's see if energy can catch a bid, and maybe today was just one random day down. But again, if I'm going to be focusing on anything in the energy group, I want to be focusing on the leader, and that's OXY. ARHS, IPO doubled off the lows with HVIPO. Nice. Let me write this down again. Charlie, is this going to be the stock just like was the one from last week? ARHS. That you said set up perfectly. That was HDSN, right? Yeah, set up perfectly, broke out, 7%, and then we got a reversal. But yeah, Charlie's bringing the good setups to the stream. That's awesome. And yeah, this one I haven't found before, but I like this. Heavy volume breakout. Now we're just really nice flagging action here. Volume starting to lighten up. Not the super strong group, and in a weak market. That's something that Ray's covered on Traderline is if you're playing these like highest volume since IPOs or highest volume in a year, and it's not in a strong group and the market's weak, your odds are just kind of even more stacked against you. We saw that with Bumble when the group was weak and we got an HV1 here, HV1 here. It eventually got going a little bit, but I mean, now Bumble's on my potential short list as well. So, all right. I haven't been able to find any entry, but I've been watching it. Michael, you were talking about Nerve. Yeah. So, I mean, you don't need to press it, right? If you don't find an A+ setup in this market, this is just not a market to go hunting and being aggressive. Like, the best things you can be doing in this market is just like reading the best trading books. Stan Weinstein's Secret for Profiting Bull and Bear Markets, something like Mark Minervini's books, Trade Like a Stock Market Wizard. Right now I'm going through Jared Tendler's The Mental Game of Trading. That's like, when we're talking about investing, right? We're investing in the stock market. That's where we think we can get the returns. But if you invest your time and your effort into trading education and getting everything in your system ready to kind of pounce when the market environment improves, that's a great investment that's going to pay dividends. That's not just you focusing on a chart, trying to overtrade a bad market, stuff like that. So as fun as it is coming on this live stream and like going through all these charts, these are really just like checkpoints, right? I'm not super excited tomorrow to step up and put 40% of my account on a trade, and I'm not going to be up 10% this week, anything like that. We're not trying to brag at this point in the market. We're in a bear market. We're trying to survive this bear market with as little damage to our account as possible, with as little damage to our mental capital as possible. And if we do that, we come back into a stronger market with a better system by reading the right books, with strong capital, maybe 90% of our total capital from the top, and also a strong like mental fortitude as well. So that's really like, if you're doing nothing else in this market, monitor the leaders. I post them on my Twitter account at Nick Drendel every single day at the end of the day. Monitor the leaders, monitor the indexes. Do we get back over the 8, the 21 EMA? Do some checkpoints, set some alerts, see how some breakouts are working. But really, like, if you're not a very active trader, demand that the market drags you back in with A+ setups and with strong stocks and strong groups, strong fundamentals, good volume patterns. Like, really wait for those A+ setups. And I'm gonna have to watch this back because I know I'll take some pilot trades and I'll kick myself for losing $20, $30. But really, right now is the time to educate yourself, go back through your past trades, and if you'd like me to look at them, email me at StockTricksWithNick, and then we could put you on the one-on-one like trading breakdown series that I'm going to be doing. So I don't see any more chart requests. We'll give you 1 minute for that, but I'll do my closing remarks, and if we get anything, then we're good. So if you guys enjoyed this live stream, please leave a like. It helps my channel out tremendously. Make sure you subscribe. I'm going to be doing this live stream. I want to do it Tuesday nights every week, and then also doing a breakout watch list every Sunday, and then other trading related videos, including that like trading breakdown or trading audit series. Nick was able to get your attention. Yeah, done. All right. Thank you guys so much for showing up. This was a really fun live stream, just like last week. FREY, perfect. Charlie with the buzzer beater. FREY, alternative other, so fourth strongest stock in the group. This is all over the place, Charlie. I don't know how. Oh, it's really tight 5-minute action, though. It just seems like the open's so wild. Fry battery. Okay. Probably not going to be trading this one either, but I'll put it on the watch list. All right. Thanks so much. Have a great rest of your week. And I got a softball game in 3 hours, so the market open is going to be a little bit rough for me. Probably going to be pretty sleepy at the bell, but all right. Take care. I'll see you guys in